Hey everybody, I'm John Trautman. I'm here to talk to you today about passive income. A lot of you guys ask, how do I create passive income? Well, on this episode, we're gonna show you how to create passive income, and we're gonna show you at the beginning, when we're buying the building, what our model looks like to create the passive income. So stay tuned, and at the end, I got a treat for you guys, and it's not just the birds that is a treat. They do make those into tamales around here, which is kind of weird. But anyways, we're in Central Phoenix. Let's talk about passive income. Let's get into it. Look, in real estate, you may already be in real estate. You may be a wholesaler. You may be doing fix and flips. But it's all about the cash flow. It's all about passive income. I always say cash flow because even if you own these assets, it's not always like it's passive. There's some involvement that you guys have to be doing on a daily basis and interact. At least that's for me, and I like it, so I don't mind doing it. So it's all about finding an asset that could spit off a residual for you that you can live off of, right? So I want to add a couple things. Let's talk about the BRRRR strategy on commercial. A lot of people are not doing this, but you guys have probably heard of the BRRRR strategy. Let's talk about it specifically. So you buy, you rehab, you rent it, and then you refinance it. In doing so, when you refi, you take your money back out and you go deploy it on the next asset. So that's what we're going to be doing here. We got a great deal on this building. We got it for $250,000. We're going to end up putting another $100,000 into it. So we're roughly $350,000 into this asset. We will rent it out. I'm sure of it. That we'll be getting $4,500 plus a month. Based on that, we'll be able to take our money back out. Our mortgage will be somewhere around, including taxes, somewhere around $2,000 a month. We'll be renting this for $4,500. We're going to pass on the triple nets, which is your taxes, insurance. Basically, everything gets passed on to the tenant. So even if we were at $4,000, we would be netting, after getting all of our expenses out, $2,000 to $2,500 a month. To me, like, is this a home run? No, but it's in the hub of where we're at. We have other assets around here. It's kind of an eyesore, so we'll be fixing up the neighborhood. But when we're all said and done, it keeps our crews busy, but we're getting an extra $2,000 to $2,500 after we've recouped all of our money. So in the beginning, when I first started doing real estate, my goal was to make a minimum of net $300 a property. Now, this would probably be closer to a minimum. It's $2,500 net, $2,000 to $2,500 net. So you have to start mapping some of this stuff out. But what a lot of people do is they get stuck in residential. They don't know how to get going in commercial. To me, commercial assets, they're a little bit less labor intensive on the inside of what we need to do, because your tenants are going to go ahead and do tenant improvements and build outs. And really what I like to focus on is the curb appeal. So right now we have some nasty concrete. You're gonna do some B-roll after this. Nasty concrete, no curb appeal at all. In fact, it looks like it's a slaughterhouse or something like that. So again, when you are thinking about cash flow and recouping your money, you want to think time and how quick can I get this asset stabilized and back on the market to rent out to get the cash flow coming in. And so you want to have your crews lined up. And so what we've done right now is we have all of our crews ready to go. As soon as we close on this, that day, we'll be starting the landscaping, we'll be starting the stucco, and we'll be starting the roof. Again, this is a phenomenal location. You can hear the traffic, which is one of the key things. What we're gonna look for is how good is the deal? We're still in this building. I wanna make sure I have plenty of equity, and I wanna make sure that I could refinance it and take my money off the table and go deploy it in the next asset. I don't want to just have my money sitting here and not working for me. Now, don't get me wrong. There are times that maybe the property doesn't appraise or we go over Well, we have a very high ROI, return on investment, or cash on cash return on how much cash we leave in the deal. But every time that I possibly can, I'm trying to take out the money that I invested, all of the money that I invested, so I can deploy it again in the next project. I'm recycling it. So I believe that will happen on this. So if I'm able to pull out all of my money, once I refinance this with a traditional bank, what am I in this? I'm in it $0. So I'm essentially getting $200 to $2,500 a month. It's an infinite return, meaning I already got my money back and I'm down the street doing the next project. This is, I think, what a lot of people need to focus in on is working on cash flow. All right, so your cash flow is the oxygen to your financial freedom. If you're trying to step away from your job or let's say you're in real estate right now, but you haven't built your own book of business, you have not built a portfolio, this is a great way for you guys to start. We hear Bigger Pockets and all these guys talk about the BRRRR strategy. It's all around residential multifamily. There are assets like this sitting there waiting for you guys to jump on them. We were looking at buildings earlier this week for roughly $30 a foot. So look at replacement costs is what I'm trying to get across. You couldn't build anything close to that. So if that's the case, you could take advantage of these market conditions. Now, I want to take this a little bit further, and it's too much for this video, but I want to show you how to mitigate your risk when taking down an asset like this. Meaning you could put something in this in escrow, and before you even close, you'll know if you have a viable business model. You could run those by me, but why don't I just show you how to do it so you could do this yourself and start making money for yourself. I'm gonna be doing a live Zoom call. I wanna invite you guys on it. When you click on it, it's an undetermined date, so once you click on that, then we'll have a date. I just don't have a date right now as we're filming this, but we'll do it here in the next week or two. And then you guys could jump on and ask me any question and we'll go through. I want to share with you guys in more detail how to stabilize these assets with minimal or no risk. I'm a very conservative investor. You would look at this and say, wow, John's got to do all this work. Like you look at some of these people just buying these apartment buildings already cash flowing. Well, to me, there's no heavy lifting. And so if the market softens, I have a ton of equity in this that a lot of people won't have when they're buying from a non-motivated seller. So again, I'm going to get into on the call with you guys how to flesh out the motivated sellers, what they look like, who they are, right? How to find them. But I'm going to, more importantly, show you guys how to flesh this model out and make sure that you're not getting into something that's going to be a dead asset moving forward. So do me a favor, click on the link below and register to our upcoming call. Love to see you guys and hear from you. And I'm looking forward to sharing it with you guys, honestly. So let's go.